Hello, everybody. Welcome to Bitcoin Not Crypto. You can find me on Twitter X at ForceTotal. And in today's video, I'm going to be talking with Peter Dunworth, who is an advisor at the bitcoinadvisor.com, which is based in Australia. And it's a multifamily office where you guys help with multi-sig custody, advice, all sorts of Bitcoin related stuff. I definitely want to get into that. But first, before we do, I'd just love to hear kind of what your Bitcoin story is, how you got introduced to Bitcoin, and what was it about Bitcoin that was interesting to you when you did get into it.
This is a painful story for me to tell, but I like repeating it because often for the noobs who are new to Bitcoin, they think they've missed it, and it couldn't be further from the truth. But my brother first mentioned Bitcoin when it was $3, and he said you should buy some. And at the time, I was full of hubris. I lacked humility. I lacked any curiosity about a new technology, and I instantly dismissed it and said that'll never work. Governments will shut it down. There'll be a new Bitcoin, and that was a very costly mistake. So I like sharing that story in the hope that if someone hasn't bought Bitcoin yet, and you should have, just to remind everyone that there's more upside in front of us than behind us, and you're not too late to that party. So I thought I was late to the party. I thought it'd never work. I was, one of the greatest skeptics, and I think we all have that story arc. And then it took me 5 years to really, talking to my brother about this every other day, and he had a Bitcoin exchange in the US, San Francisco, and he answered all of the questions, but there wasn't the notes, the books, the podcasts, the education pieces, this type of format for you to learn and consume as much as you wanted about Bitcoin. It was pretty sparse. So I was a very slow learner. It took me 5 years from that first introduction to Bitcoin to getting comfortable with investing money in it at a point in time to think, oh, okay, well, maybe there is some legs to this as an investment vehicle. But that took 5 years. So it was 2016 before I considered it an investable vehicle. But back in 2016, it was a very speculative asset. And it's funny, if you fast forward, another 9 years after that to 2025, where we are today, sort of in this whole story arc, yes, you could have bought Bitcoin at $3 and you missed that opportunity. Yes, there's an opportunity to buy in 2016 and every day there forward. But from my total experience in this space and around traditional finance, I actually think right now is the greatest opportunity that anyone has to buy Bitcoin on a risk-adjusted basis, because the fear of government shutting it down has now been nullified with the support of the US government. The strategic Bitcoin reserve is the US government flagging that this is going to be a significant asset for them moving forward of strategic national importance, so much so that they're going to have a reserve on it. And all of a sudden, the fear of Bitcoin going to zero has now been taken off the table. And I look at that and I think, up until that point in time, or this point in time, that's been a real fear. But now we've got that removed. So to anyone thinking about Bitcoin, I'm like, I know this is really hard to stomach when you're looking at Bitcoin and you could have bought it for $3 and now it's 83,000. But on a risk-adjusted basis, now is the best time to be buying.
It's really hard for people to wrap their minds around something when they had an opportunity. Like there's even people that bought and sold Bitcoin, right? And their entries at those times were so low. It's a weird mental thing to get back into what seems like the same asset at such a higher, like, US dollar denominated price. But I think what you're kind of saying there is, like, it isn't really the same asset. I mean, technically it is, but it's been de-risked is what you're saying. And, like, I think there's a lot of truth to that. I think that a lot of the risk has come out of Bitcoin.
I do too. And you look at it, it is an evolving asset, and this is where the criticism that Bitcoin gets is that it's a pet rock and it doesn't change. Well, yes and no, it actually does change. And you look at, say, from 2011 to where we are now, there's been multiple upgrades to the network. They've debugged the network. They've made significant improvements. They've added Lightning and Liquid layers, layer 2s to it, and they're working on other layer 2 networks. It's becoming a much more tangible asset that people can actually see a use case for now. It was, described as a pet rock previously, but now people are starting to understand that this actually could be, and this is on, say, what I firmly believe is that Bitcoin is the best form of collateral ever invented. And everyone thinks that the world's got a debt problem, but it's not a debt problem if you've got the collateral. Now, because the debt is not backed by any decent collateral that you can actually monetize in the event of a liquidation event, the problem is that we've got no collateral to back up the debt. If we had the collateral for the debt, there's no debt problem. But this debt problem that the world talks of is because there's no collateral backing it. And on a sort of a deeper level, this is where I look at Bitcoin and think Bitcoin is the ideal collateral to fill that void and create the collateral that the world needs, because there are no downstream social consequences of financializing Bitcoin other than making some crypto punks and, mad keen Bitcoin maxi psychopaths extremely rich. But making Bitcoiners really wealthy doesn't have a downstream effect on increased inflation, increased cost of housing, increased cost of living. Whereas if you monetize through credit property, then you're raising the cost of living, raising the cost of housing. This is why we have a housing crisis, because no one can afford, in Australia anyway, we've got a housing crisis. We've got to pay 16 times our average annual salary for the average home in Sydney. That's insane. That makes Canada house prices look normal. And they're insane. So you need to financialize an asset that becomes the world's collateral. And Bitcoin, to me, is the obvious choice, because not only do you get more bang for your buck, it's a better risk-adjusted return by putting $1 into Bitcoin than $1 into property, because the multiplier is far greater with Bitcoin than it is for property. But at the same time, there's no downstream social consequences of increased inflation, increased property prices, increased pressure on cost of living. So to me, it solves a lot of society's problems by monetizing Bitcoin as opposed to monetizing property and stocks.
Yeah, so this is really interesting. I want to get a little bit deeper into this and maybe explore some of the terms that you're even saying, and deeper into what our debt is if it's not collateralized. But one aspect I want to get to first is, if you're struggling to figure out all this Bitcoin stuff and just want a one-on-one helping hand, I now do consults, which you can book through the link in my description. We can cover moving your Bitcoin off of an exchange into a hardware wallet, security best practices, and basically anything else that you want to go over. Just let me know what it is, and we'll figure out a time that works for you to book in a consult. If you're looking to get yourself some Bitcoin, you can use my link in the description as well for Bitcoin Well, and it is the best possible way, in my opinion, to buy Bitcoin. It's a non-custodial exchange, which means there's no counterparty risk. You send the money, they send you Bitcoin directly, and they also have non-KYC options available, and they have the lowest spreads and fees in the US and Canada. If you want to secure your passphrase for future generations, or just in a way that is very safe and secure, I would recommend Stampseed. You can use my code BTC not crypto 15 and get 15% off. They have a titanium seed plate and a stamping kit that works really well, and it is a great product. Check them out as well with the link in the description. There's this idea, like, even of gold, right? Of Bitcoin being like digital gold, and gold has a use case currently. People use it in jewelry, people use it in electronics, in industry to some respect. And then on top of that, there's a monetary premium on it, which is kind of what you were talking about. And it's like we would actually have a lower cost of production of anything that had gold in it if there wasn't that monetary premium on it. Like, it would be more useful as a metal, which is kind of interesting. And it kind of relates to, again, like housing, right? What you said about, a lot of the debt we have in the world is in the real estate market, like in mortgages, and that's inflating the housing costs, and making it harder for people to afford living. And the other part that I find very interesting is, if, like, we can look at the 2008 financial crisis and how there was a lot of bad mortgages. If there was a house that went into foreclosure, it affected all of the neighboring houses as well, because it would actually make it harder for them to sell if those individuals needed to sell because there was a foreclosure house on the same block. So there's like a contagion effect, which I think is, maybe we could go down that route there. Like, if we're not looking, or if we're looking at our current system, why is housing, or why are any other assets we've seen not fit for collateral? Like, what is the problem with these assets as collateral?
The problem I see with it is the reason why they're not, firstly, they're actually technically great as collateral, but people, when you wind back the credit on this, don't really understand all of the rules and impositions that the governments have placed on financing property to get that to being a great collateral for debt. Now, that's how they've structured it, and they've done a whole host of things to make property the best form of collateral in our society. Now, by the best form of collateral, I mean that mums and dads get the lowest interest rate with the best loan terms and the greatest protections if they buy that property. 30-year loan term, fixed interest rate, don't have to touch it for 30 years. As long as you meet the repayments on that, they don't revalue the property. To your point about the GFC, when you'd sell a property in a neighbourhood and it'd dramatically drop and reset the prices in the neighbourhood, well, you might have bought a property for $1 million. The new property price next door sold for half what you bought it for at $500,000. Rather than the banks coming around and rewriting the value of your property and saying, hey, you need to put in $500,000 to top up the equity in your home on this loan, the governments have made the provisions that if you enter into that contract, you can't renegotiate the value of that property until the end of the contract if the client, if the borrower has made good on all of their payments up until that date. So that is a protection of that asset, and it's a favourable loan term that creates the outcomes that the governments want to achieve, which is home ownership. That need for governments to push home ownership on everyone in the country really started with Margaret Thatcher in the 80s, where she had a look at the Housing Commission and basically gave subsidised interest rates to the tenants there to go and buy their property, because the economic theory behind this was that if you're a homeowner, you're going to move up that socioeconomic scale much faster, and you're going to have equity in the upside of it, so you'll keep the property better because it's your property, it's not the government's, you'll actually take care of it, and then we'll all get rich together. And the government has created those credit policies to ensure that it's a favourable outcome for a borrower who's borrowing against the property. Now, I look at this and think, understanding all of the measures that they've taken to create favourable outcomes for property finance, the government, if they so desired, could create the same outcomes for Bitcoin. So just think about this for a moment. If the US government, which is now supportive of Bitcoin, said, hey, we're going to let the banks borrow, like let you borrow on your Bitcoin, and we're going to finance Bitcoin on a 30-year loan term, that if you can meet the mortgage on that Bitcoin and you pay that mortgage monthly, they're not going to revalue that Bitcoin downwards, mark to market, like they do every other lender. So all of a sudden, you take out that volatility of borrowing on the most volatile asset, assuming you just meet the monthly repayment and keep paying it. So I look at this and think, I know this is really upsetting to a lot of people, but the government has so many levers that we don't know of or realise that can craft an outcome beneficial to an asset class. And I look at this and think, I would love to get my hands on the advisors to the government in the US to talk about some of these ideas, to say, hey, let's create favourable outcomes. Let's get Bitcoin ownership in the hands of every American by way of, basically a Fannie Mae or a Freddie Mac corporate lending institution that's quasi-government, that's built basically to support and finance Americans. Well, hopefully that extends to Australian and Canadians, because I'd like to do that. And it finances, all of the citizens of the nation to do that.
It sounds like you're kind of saying the regulations around mortgages, loans, property ownership has propped up the price and value of these things as well.
It is. And what's happened is, there's probably no greater example of this. In the 70s, you had to come up with 50% of the value of the property, and the bank would loan you 50%. since the 70s, there has been a degradation of credit quality, which probably peaked or bottomed as far as credit quality goes pre 2008 with the GFC crisis, where the US banks were giving away ninja loans, no income, no job applicant loans that you could have been picking strawberries in a field for $5 an hour. And if you signed that you earned and could afford $1 million mortgage, then hey, Peter's good for $1 million mortgage. And they wouldn't even look further at that. Now, in addition to the serviceability standards of whether or not you can afford a loan dropping dramatically through that period of time, they also ramped up the loan to value ratio or loan to value ratios that you could borrow on a property. And it went from being able to borrow 50% of the value of the property to being able to borrow 95% of the value of the property. So all of a sudden, you needed such a small amount of equity to get exposure to that property market and that property investment or home, whatever you want to call it. And that was a huge driver upwards for the values of these properties.
Yeah, and a lot more debt in the system, right? Because they're creating debt as opposed to putting in money that they had earned, which would lead to more money creation, more leverage in the system, more risk, right? More debt is more risk. So, we've talked about property there, mortgages, that side of debt, there being collateral in the form of these homes or property. Um, there's a lot of other debt in the world. I'd love to hear what your thoughts are on the lack of collateral in, say, US Treasury bonds or anything like that. Or just, government issued bonds, I should say.
This is going to get me in a lot of trouble, but one of my all-time favorite movies is Dumb and Dumber, and the issuance that the governments are making right now, they're coming from a position of weakness in that they're seriously indebted. The 35 or 36 trillion dollars that the US is indebted, that's only on the visible outstanding liabilities, but there's a whole host of unaccounted for liabilities to the tune of hundreds of trillions of dollars that are outstanding as well. And so the real figure is that these treasuries that they issue are really not worth the paper they're written on. And the scene out of Dumb and Dumber where they're at the end of the movie and they've had the cash full of the briefcase full of cash, and they've basically lived the high on the hog, basically writing out IOUs for everything that they've spent. And these, I shouldn't say this, but these US treasuries are effectively just IOUs. And this is, I slag off the US, but the US is the best of the bad bunch. Like, I would much rather take a US treasury than anyone else. And, something that, is just fundamentally broken is you've got a country like Italy issuing 2 year, 10 years, whatever it might be, at a lower interest rate than what the US can issue it. And I'm thinking, the US is bad, but I know in my very ignorant state that the state of Italy's affairs are far worse than the US, yet why is Italy getting, awarded a discounted interest rate on their treasuries, which basically is a lower cost of borrowing, when the US, I think, is a much better borrower, much better credit quality. And this is the upside down world that we live in right now.
Do you know why that is? Is there, I haven't heard about that, but is there actually a reason for that, or?
I think there is a quasi provision that they're part of the European Central Bank, so they get some godlike status that we're the ECB, and if you peel the layers back, it's probably in some way, shape, or form. And I know this will be wrong, but there's some form of yield curve control happening in Europe to sanitize their interest rates versus the US and make it difficult for the US to raise money and costly. And I think that rift has basically been made public now. I think there is a rift between the US and the European Central Bank, or the Federal Reserve and the ECB. And that started under Jay Powell, where a couple of years ago at a climate conference, he basically said the Federal Reserve's got no business being in climate change. We're not here for that. And that was a shot across the bow. Christine Lagarde, very upset at the thought that the US isn't going to kowtow to any of their policy demands and requirements. So it was really about, that was Jay Powell, as hard as this is for a lot of Bitcoiners to hear, but I think he's he's done a wonderful job of looking after the American interests. He raised rates through the roof, and he said, we don't give a rat's if we go into a recession. It's going to be worse for everyone else on earth. Um, Very selfishly, he put America first, but they've had 50 years or more of putting everyone else first. So I guess it's time to pay the piper.
Right, right. That makes sense. So, kind of answering that question of what backs those debt instruments is collateral. You said they're basically IOUs, so it's supposed to be the earning potential of the government to pay back their debt, and then ultimately, right, they have the money printer, which can backstop all of this if they're not able to pay it.
That's the ultimate backstop. It's They just print it, and this is the funny thing. Um, I guess that's ultimately the greatest form of collateral ever invented. That is literally a magic money printer. So you can never default when you print the money that you need to pay the actual loan. And this gets to the next point, which is sadly, like, it's criminal what they do, but they debase our money by printing more of it. And they're printing circa 10% extra per annum. And I put this to you in terms that we probably understand. But if we went to a bar or a club or whatever, and we ordered a really fine scotch or whiskey or vodka, and we watched as the barman put the beautiful vodka under a tap and poured 10% more water into it to dilute it, and then asked us for the full payment on that, we'd be rightfully very upset. We would think that we've been robbed from. And this is where we get robbed on a daily basis from our governments, who are just printing more money to pay for things that we don't really want or need. And this is the frustration, that because everything is denominated in US dollars or the local currency, you get debased. So, you look at how property prices have gone up. Ironically, those property price increases correlate almost perfectly to the amount of debasement or money printing that your government has undertaken. In Australia, it's 10%, and property doubles every 7 years on average, roughly. And guess what? Our debasement is roughly 10% per annum. So the money is worth half as much every 10 years, which coincides perfectly with the property values going up. So, you're at a stalemate, that this is the only way that I can see to protect yourself from that is to not play that game and do your very best to denominate everything you can in Bitcoin, because it's the only thing that they can't dilute.
Right, right. So this comes to my next question here, which obviously this is a massive problem. I don't expect any one person to really know the solution to this. And it almost sounds like maybe the only solution is to fix your own personal finances, because that all of that is going to happen regardless of what we do. But what do you think, beyond just adopting a Bitcoin standard for yourself, or getting assets that they can't print away? Um, what what do you see this eventually leading to? Like, this doesn't seem sustainable, the money printing, the debt, any of this. Like, what do you see happening in the future with this fiat system?
I think this can go on for a lot longer than we would expect. Um, I never want to discount their ability to prolong a system that they're completely dependent on. So we could be running this experiment for the next 20, 30, 40 years. And in the meantime, Bitcoiners are getting fabulously wealthy. The entire world's checked out of the fiat system, but they still keep printing money. And, because fiat has no bottom, there's no top in Bitcoin. Bitcoin could be, hundreds of millions or billions of dollars a coin. And, if you've got one Bitcoin, you are going to be extremely, extremely wealthy. To me, the solution is it's really about taking responsibility for yourself and your own outcomes. And hopefully that serves as a role model to your friends and family when, through time over 8 years, you sit there and see, hang on a second, why is this person, all of a sudden on easy street, or why are things a lot easier for them? Why are they not concerned about, coffees costing $6 or $7 a coffee? Like, what are they doing? And then serving as a role model, and maybe somewhat of a guide or a Sherpa for your friends and family to get on a Bitcoin standard. Because I think what's going to happen is this is a bottom-up movement until it's not, until one of the federal governments globally or one of the global governments decides that with their money printer, they're just going to buy as much Bitcoin as they can physically do that. And they literally hold their finger down on the buy button and they buy every spare Bitcoin that's sitting on an exchange.
Yeah. Wow. Yeah. Do you think that's already happening behind the scenes? Do you think there's I mean, they're not pressing the buy button down just flat out with a money printer, but do you think that nations realize that Bitcoin could have this potential to I don't know, help them, I guess. And they're strategically buying it. I mean, we've gotten the announcement in America of the strategic Bitcoin reserve. Um, do you think that nations are actually buying Bitcoin?
I do, but I don't think it's public. And I think it's very unlikely for any of the major governments around the world to front run the US. I just don't think that's going to happen. You've got Bukele, who is an absolute, like an incredible world leader on the global stage, but he is a pimple on an elephant's bum as far as economy size. That's not globally significant. With all due respect to Bukele, I think he's an incredible leader. He's turned that country around. He's done some incredible things, but there's just not enough to shift the needle. But I think it would be. I don't think the major other powers around the world, like your, US aligned interests, whether it's India or Europe or Canada, Australia, the Brits, you name it, I don't think they could front run the US. There's no way they would let that happen. I think the US would be absolutely livid and they'd turn around and just extort them and say, right, you front run us. We want your Bitcoin and we'll pay for it at this price. So hand it over. And otherwise, we're not going to provide military support for you. And I can see that happening. I think, like him or love him, I think Trump will get results and he'll do things in a very unorthodox manner that a lot of people will disagree with. And then there'll be a beneficial outcome for the US. And I think standing in his way at the moment it's going to be a very tough thing to do.
Then there's the other nations that are maybe less aligned with America's interests, and they're probably just doing it secretly so that they don't draw attention to themselves. That would be my guess there with them.
Yeah, but they're not doing it in any significant or meaningful way that I can see.
Right. Yeah.
They're not really putting their finger down or pressing hard on it to buy. To me, the most significant, probably two or three of the most significant nations globally, who will create a strategic reserve that have the ability to redefine geopolitics: Qatar, the Saudis, and Russia. And the reason why I say that is because if the price of Bitcoin goes up significantly enough, and it needs to go up a lot, like 1,000 times from here as far as value goes, but I think it's possible to do. But there is a very real possibility that Russia will not need to export their gas. If the price of Bitcoin goes up significantly enough, they'll be able to monetize all of their gas by mining Bitcoin domestically without being at the risk of geopolitics and having their Nord Stream 1 or 2 blown up by the US. I know that's a controversial thing to say, but if I'm a world leader and we've got abundant natural resources that the world wants as far as energy, and I can mine Bitcoin and monetize my domestic gas production by not exporting it, by just mining Bitcoin on my sovereign land without running the risk of international sabotage, that's exactly what I'd do. And I think the price of Bitcoin will fulfill that need at some point in time. And this is where, to me, an energy contract, oil and gas, it only makes sense that energy contracts will get denominated in a digital energy contract, i.e. Bitcoin, to fund it all. And this is where, there's 100 million barrels a day at circa $80 a barrel, give or take, whatever the day is. That's $8 billion a day of funding that needs to be met by way of Bitcoin. And I look at that and think, if you divide the amount of Bitcoin created on a day, 450 Bitcoin, divided by fulfilling just that one single market of $8 billion a day, I haven't done the numbers on it, but it adds up to a significant price hike in Bitcoin from where we are today, and it makes the world a safer and better place.
That's really interesting. Yeah, because the Bitcoin mining network is a guaranteed customer that will pay you in sats. And yeah, you don't, I mean, maybe even the infrastructure would be less, right? You don't need to build new pipelines, maintain them. Uh, yeah, I mean, the amount of risks that they're cutting off with doing something like that. That's a really interesting theory. I actually haven't heard that one, but it does make a lot of sense, or at least, a portion of it they could, diversify, right? That's what risk's all about, and investment is all about, right? So even if they had a portion of that, they had some kind of problem selling to whatever other customers they had, they still have this piece of Bitcoin mining that they could sell their energy to.
I think that doesn't get anywhere near enough play, but it's just another problem that Bitcoin solves.
Right. Yeah. Yeah. I want to get back to another problem that Bitcoin solved. That we were talking about debt earlier. I wanted to go back to that because we talked about the downside of using these instruments we've been using as collateral for debt. Why is Bitcoin better collateral for debt? Well, what makes it better collateral?
Oh, good question. Sort of foraging out from my head some of the things that make good collateral. It's been a long time since I've talked about it, but there were basically the three C's of lending. You want collateral, capacity, and character are the three C's of lending. And the collateral is what is the actual thing that we're taking security over. The character is what is the character of the borrower. Do they have a propensity not to pay bills, or are they going to pay their bill if we loan them money? And the final is capacity. What is their servicing capacity to repay this loan? And when you look at those three C's of lending, you basically come to the realization that if you're lending against a property or a personal loan or a credit card, things like that, you need to take into consideration those three things: capacity, collateral, and character. For most of those, the collateral is typically the home or the car that they're taking a loan over, like a lien over. For personal loans, there's only a lien over the actual person's character, so there's no collateral, it's just character and capacity. And what's interesting is when you have Bitcoin as collateral in a loan agreement, you don't have to worry about the capacity of the borrower to repay it, and you don't have to worry about their character, because you as the borrower are holding a bearer instrument in Bitcoin. So if they fail to pay them their loan, you instantly sell that collateral, recoup your money, and then hand them the change with what was left over. So it completely redefines risk from a lending perspective because it's the best form of collateral. It's 24/7, 365 liquid, which is the only market on earth that is 24/7, 365. And you can get liquidity at some price any second of the year. And this is where, if you look at taking a mortgage out on a home and using a property as collateral, if there is non-performance of that loan and the borrower doesn't repay it, it's a 3 to 6 month process to recover your cash from that property. You've got to go through a whole host of legal journeys. You've got to go through due process. You've got to go to the land titles office to get the title deed back and basically stamp that there's non-performance on it. And then you've got to go to market to try and recuperate your losses in a court of law. Now, all of that is irrelevant when you borrow on Bitcoin, because the fiat system that we work on is an under-collateralized system. It's a fractional reserve banking, meaning $1 of equity for $20 of debt on top of it. Whereas lending in the Bitcoin world is an over-collateralized lend, that in order to borrow $1, you've got to put in $2 of security or $2 of Bitcoin. So in a very simple analogy, our fiat banking system literally looks like a tiny little bit of equity with an upside down pyramid of debt built on top of it. And the Bitcoin ecosystem looks like a base layer of a pyramid where all the equity sits, with a very little portion of debt sitting on top of it. And I look at that and I think, what is a more stable structure? An over-collateralized system with a really firm base wide equity at the bottom, or an over-indebted system with a really wide base at the top and a very little skinny point at the bottom that it's about like it's literally teetering on, ready to fall over at any minute. And this is where, to me, it just makes so much sense to have an over-collateralized system moving forward to provide security. And the funny thing is, if we wind back 50 years or so, we weren't an over-indebted society like we are now. And it started out with a base, all the equity at the bottom and a little bit of debt. But as a little bit of debt grew into a little bit more and more and more and more, it's turned into this Jenga tower that's 10 foot tall, and it's sort of swaying in the breeze, ready to fall over. And step in Bitcoin with the ability to create collateral that is like no other.
So it's kind of like what you were talking about. I can't remember what decade you were talking about, but where people had to put 50% in for a mortgage to get the loan. So the loan to equity was higher. Couldn't that same system that we have now with the three C's and the inverted pyramid, couldn't that happen with Bitcoin as well? If people were willing to take an under collateralized loan with Bitcoin, wouldn't that be possible though?
Yes and no. There are always going to be people who own the underlying and do not want to go through that process, and they don't want to risk their Bitcoin. Now, in the event of the new system in Bitcoin ending up like the old system, it's funny, the fiat system rewards debt. So the more debt you take out to buy assets, the faster your wealth grows, because you get the debasement of the money is a free kick in carrying the debt, and the asset price goes up in value. So it's a 2-for-1. That rewards debt holders and it punishes the equity holders who are putting cash in the bank to save. Under an over-collateralized system in Bitcoin, you don't have to participate in that borrowing structure and debt structure in order to get ahead. You can just hold your Bitcoin. And so it will reward the whole coiners who don't get involved in the lending just as much as it rewards the people who are taking the risk to borrow on their Bitcoin.
Very interesting. Yeah, that's interesting. There's another thing you touched on there with the loans. If there's a problem, the person that gave the loan could liquidate the Bitcoin. This is all theoretically, or whatever the system ends up looking like, into a market that trades 24/7 that has some amount of liquidity. I've heard you talk on another podcast about how the size of Bitcoin's market is becoming interesting to institutions, these bigger players, because they need a certain amount of liquidity in the market. Would you be able to expand on this idea a little bit and tell me what there is there?
Institutional investors and governments alike, they're very structured in their investment approach. Excuse me. And the most important thing about any investment that they make is being able to get out of the investment if they've made a mistake. So there is a premium on the exit door. And when Bitcoin's a $1 to $2 trillion market cap, with all due respect to an incredible achievement in Bitcoin attaining that size, but that is not a significant sized market where institutional investors and governments alike can run for the doors with safety. They're gonna take a beating on the way out, and they're gonna have huge slippage if they unwind a position. And by slippage, I mean the price of Bitcoin might be at $83,000, but if they're selling in volume to get out because they have to get out for whatever reason, they might take the market from 83 down to 65,000, and all of a sudden they've had a 25% loss on walking out the door. And a lot of people don't want to take that risk. It doesn't matter what the upside in front of them is with Bitcoin. They're more concerned about protecting and covering their asses and making sure that the exit door is available to get out with a cost of maybe 1 or 2%, rather than a 25% slippage and you've blown the whole market up. And this is where, as Bitcoin's size increases, it really becomes a Veblen good that as it becomes more expensive, it becomes more sought after. And this is where institutions can actually start allocating much larger, deeper pools of capital to Bitcoin as that market cap grows. So there's a ton of capital that needs to come into this market, but at these levels, it still can't allocate in the size that it wants to, because it's going to move the market around. Now, a strategic Bitcoin reserve will help solve that problem, because it should put the price up a little bit, and it should create a buyer of last resort in some respect.
Interesting. Okay. So we've seen huge price appreciation in the past because of the small size of the market with Bitcoin. Um, it's getting larger. You still say it is small, and in the grand scheme of things, it certainly is. Um, is there sort of the possibility for us to still see rapid price appreciation over whatever period of time because the size of the money coming in um, is proportional to the size of the market and how it used to be. Basically, what I'm saying is like we need more money to move a bigger market, but is that money there or able to be there now because the market is getting bigger?
Yeah, I think it's a sort of it's a perpetual flywheel that as the market grows bigger, it attracts more capital, deeper pools of capital come to it, and it creates the effects that it's looking to, which is a level of safety for getting out. So I think as Bitcoin grows in value, more and more people around the world are going to allocate much greater percentages of their wealth to it, and this is where there's so many moving parts behind this. But Bitcoin might be maybe, what is it, 1% or 0.1% of the world's wealth right now. And by my thinking, if it's going to support the debt markets and obligations that are currently out there at the moment, that's going to need to grow 500 times from where we are now. And that 500x appreciation, I think, will come over the next 20 years, because it needs to fill out and grow that market. And this is where, if we accept the reality that we have a collateral problem disguised as a debt problem, and we need to solve the collateral, this to me is the perfect instrument to solve the collateral problem, because it allows you to print the smallest amount of money for the greatest creation of equity or collateral. So it's the greatest risk return trade-off out of printing for property or printing for stocks, printing for bonds or commodities, or printing for Bitcoin. $1 into Bitcoin goes, leverages it up probably 10 to 20x, and $1 into property might get you a 10% return. I look at this and I think, well, it's just simple math. What do you want to achieve? Do you want the result, or do you want to print unlimited amounts of money to support that asset class? And this is where, when you then throw on the social consequences of supporting property as the asset class you're looking to provide the collateral with, we're getting to a breaking point in Western democracies, I feel, where the cost of living crisis is having a severely negative impact on basically, basically births. It's so expensive for young people now to actually have a house. They can't afford having a family. And this is, complete self-immolation of a culture and a society when housing gets so expensive, and you value, as a society, property prices being really high over the ability to create a family. And this is where Bitcoin, if you prioritize Bitcoin as the collateral that you want to incentivize everyone to go after, then that will demonetize stocks, it will demonetize property, and all of a sudden it will be a huge deflationary effect on the cost of living.
Yeah, that's my favorite knock-on effect of Bitcoin is the demonetization of housing and the lower cost of living that it could create by giving people a store of value, which is what we need. And another thing there that I want to get to is something that we talked about originally, which is sort of this nominal bias that a lot of people have, where they see Bitcoin, it's 83,000, whatever it is, and they think, oh, I missed it. It's too expensive now. And you're saying, okay, because it's gotten this expensive, we now have new buyers that are able to buy it. And as it gets even more expensive, there's going to be other new buyers that are only able to buy it because of how big the market is at this point, which is something that I think a lot of people miss. They just think they don't even know anything about that. Maybe, I don't know. It's quite an interesting idea though.
It's such a dichotomy, because a lot of people think that because it's expensive, that they don't understand that this thing can literally go up forever. As our good friend Michael Saylor reminds us, that it really can. And this is where, if you have a cursory look at Bitcoin, you will think that is a foolish notion to think that it can go up forever. But that is because you fail to understand the matrix that you're living in. That they are just printing money and they are debasing you day in, day out. You have no awareness of this whatsoever. And because they can debase you forever, the price of Bitcoin will go up forever because it's the only protection that you've got against it. So um, it's funny, to your point earlier, there are people who bought Bitcoin early and then sold. And what's funny to me is, well, it's not funny, it's sad. And I just want all the previous Bitcoiners who I call once coiners, I want them back on the train and, hey, get back onto it. This thing's got a long way to run. You haven't missed anything. And, swallow your pride, go buy some more Bitcoin and get back on the train. We miss you and need you. Um, but on a personal level, the only thing saltier than no coiners about Bitcoin are once coiners. I find them the saltiest of salty when it comes to how Bitcoin's going to go to zero, because they bought it at $10 and they were early and they figured out, oh, it was a Ponzi, and they sold it at $1,000, and it's like, well, that's 100x ago. So yeah,
Yeah, no, it takes humility, and it takes willingness to understand what it is, and what the problem is. I mean, that to me was a big one, because I learned about Bitcoin. Well, I heard about Bitcoin a couple times, but then I really decided to dive into it a little bit more in 2016, and bought a little bit, ended up selling it, just decided to do other things. And I learned a lot about the fundamentals of Bitcoin, but I didn't really understand the problem that it was, how big the problem was that Bitcoin was solving. I think if I had understood that, I would have kept a lot more of it. Because I think that's a lot of what people are missing. Like this whole conversation has been about the problem, the fiat debt denominated problem that we've had, and how Bitcoin fixes that problem to a large extent.
there's a lot to Bitcoin that it just takes a lot of time. And sadly, I wish I had a magic bullet, like a silver bullet or a panacea that would solve everyone's understanding of it overnight. But sadly, this is the hero's journey that every Bitcoiner has to go on for themselves to figure out, well, why is it relevant for them? And probably my biggest regret about Bitcoin is that you find Bitcoin when it becomes a need, not a want. And that's when you start learning about it and really trying to understand this thing. And that's where I think commitment is really built in that.
Yeah, definitely. And this gets a little bit into what you do, at the Bitcoin Advisor. I'd love to hear a little bit about that. And I'm assuming that's for people that not only want to figure out how to secure their Bitcoin properly, but just want to learn about this asset. What are some of the important things that people should learn, and what is it that you guys do over at the Bitcoin Advisor?
It's a really simple service. It is, we help our clients procure and secure their Bitcoin. And that procuring and securing Bitcoin might range from anyone who's brand new to Bitcoin, or some Bitcoin OGs who have looked up at their own self custody setup and realised they might not be totally comfortable with it, and they want to have some collaborative security where, in the event that something happens to them, that their wife, their children, their beneficiaries will not lose out on the Bitcoin that they've worked so hard to secure. And to me, it's a really fun job. We get to talk about Bitcoin all day, every day, and you know, there's it's almost a comical experience, because what Bitcoiner doesn't want to talk about Bitcoin all day, every day? And this is where I'm really blessed to work with some of the best Bitcoiners in the world who are on our team, and all we want to do is literally talk to people about Bitcoin and why it could be a good fit for them. Now, whether those clients go ahead with it or not is completely up to them. But we want to be a good citizen in the world of Bitcoin. Bitcoin's given all of us, as the advisors, a new lease on life, and it's completely redefined our world. And we want to share that message, and we've developed a service to help people do that. But we understand that some people have an issue in paying for services in Bitcoin. So we make all of our IP available for free, and it's a collaborative security protocol that anyone can implement themselves. and it avoids and removes every single point of failure from a client's self-custody setup. So by using a collaborative security model, we think there's no solutions, only trade-offs in Bitcoin and self-custody. But we think that with collaborative security, the trade-offs that we make deliver a superior performance and an outcome through time. So we're really fortunate. We've been doing this for the last 9 years. The Bitcoin Advisor was set up on the back of a multifamily office that I've run for many years prior to that, and giving advice on clients to buy Bitcoin since 2016. And one of my proudest achievements with this business is that we haven't lost a single Satoshi, and we've been through, sadly, 3 deaths with clients now. So they were self-custodying their Bitcoin, they passed away, and we were able to move that Bitcoin to the beneficiaries without losing any Bitcoin whatsoever. And this is where there's to me, what I see is an evolution of a Bitcoiner, that you get into Bitcoin typically because you're younger, you want to take more risk, you invest a lot of your wealth into it, you let that sit through time, and all of a sudden, 4 to 8 years later, you end up being very wealthy in comparative terms to where you were. And if there's a wife or a husband and there are kids that have come along into your life since you first started, the not your keys, not your coin mantra that you went with, all of a sudden, when you realize that this wealth is actually there to support your family, your wife, your children, your parents, whoever that might be, there's a very different set of trade-offs that you want to make for that. And this is where we're happy to help and talk to anyone about those trade-offs, and why we think collaborative security is a nice middle ground to ensure that you're never going to lose your Bitcoin. Your beneficiaries, your loved ones, aren't going to lose out if you pass away. And most importantly, we can demonstrably prove to clients that we can help their loved ones move the Bitcoin in the event that they're not here. So there's nothing that gives peace of mind, and I can make all the promises in the world, but being a good Bitcoiner, don't trust, verify. One of the best parts of what I get to do is when we get to meet the families of the Bitcoiners and show them how the process works to the loved ones, and to see that penny drop moment and that relief from the loved ones where they realize, oh, thank goodness, I'm not responsible for these 24 words and then a cold card, and then I've got to do this and I've got to that, and I've got to scratch my head and turn around on a circle. It's like all of these things that they've got no interest in really following and listening to. They realise that they're not responsible for that anymore, and having a third-party professional who can help them in the event that they're stuck usually gives them an enormous peace of mind, and most importantly, allows the Bitcoiner and the family the confidence to then allocate more capital to Bitcoin. And so that's really what our job is, that if we can provide a framework that there is no chance that the family can lose the Bitcoin, then that opens up the opportunity in the conversation for the family to look at what other assets they've got to then apply to Bitcoin.
Nice. Yeah. I think inheritance planning is super important, and just securing your Bitcoin. There's different ways to do it, but I think what you guys have created there sounds like a very good solution. If you've been doing it for 9 years now, I imagine you have some very happy clients at this point. That's awesome.
Yeah, it's been a buzz, and it's the real juice for the job is actually getting to go on that journey with clients and seeing what that does for them. So that's the fun part.
Nice, nice. And I'll make sure to put that in the description as well, to your website and to your Twitter profile. Is there anything else that we haven't covered that you want to talk about Bitcoin before we go here, Peter?
I think in this market where we are at this point in time, sort of mid-March of 2025, where price is down maybe 25% from previous all-time high, the natives get restless and are baying for blood. And why aren't we at all-time highs again? It's just, I think, a matter of being patient, reading the room, and having a look around at how far we've come and what is coming down the pike. Because I think, I don't want to say this because it's PTSD from too many misgivings previously on this, but I look at this and we are much closer to the suddenly part of the gradually than suddenly than we've ever been. So I think it's just a matter of patience. Buy as much Bitcoin as you can, secure it so that you don't lose it, and try and do your very best in this market to just take this opportunity to buy as much Bitcoin as you can, because it feels to me it's on sale at the moment. But there's a whole host of catalysts coming later this year which will put upward pressure on the price of Bitcoin, I think, dramatically.
Yeah, there's definitely some tailwinds, and I can't believe it's at the price it is. It's very undervalued in my opinion, for how de-risked it is, and for all the studying I've done, knowing what it is. I mean, that's a big part of it to me. Is I sleep so easy with Bitcoin because I've done so much learning about it that my conviction is really high. So that's always what I tell people is, if you learn about Bitcoin, you study Bitcoin, you're going to want to buy as much of it as possible.
So true.
Yeah. All right. Well, thanks, Peter, for your time today. I really appreciate it. Thanks for being on my podcast.
Forrest, thanks for having me. Hope to catch up soon.